Bonjour à tous, bienvenue au TechSense Podcast, le podcast de la tech, le podcast du Luxembourg, le podcast de la tech au Luxembourg. Bonjour Lily Wang.
Hi Laurent.
Hello.
Thank you so much for having me here.
Thank you. We're happy to have you in the podcast. Please, Lily, tell us about yourself. Introduce yourself.
So my name's Lily. I'm currently a partner at Expon Capital. We are a venture capital firm based in Luxembourg, investing in early stage companies within the Luxembourgish startup ecosystem. And a little bit information on myself. I study mathematics. Many of my friends today are data scientists and programmers, but then I switched to finance, where I learned how the capital works in financing companies. And I find my calling within the venture capital industry, and the mission of what we do is to leverage capital and network in helping tech entrepreneurs succeeding in their mission and vision.
Okay, thank you. That's interesting. We have something in common, I realized, because I studied mathematics as well.
Okay.
Then I went into engineering.
Yes.
Then I went into business, study finance.
Yeah.
Then I went astray again. But the mathematics is a good background, I would say.
And then we switch to something a little bit less abstract.
Yeah, that's exactly it. That's why I switched, because I was doing mathematics and I thought, well, what do I want to do later when I work? So that's why I went to engineering. And then I like the business, the finance aspect, maybe because of the mathematics, and I was good at it. So I went into doing an MBA, and I almost went into venture capital, to be honest.
Okay.
I regret I did not. But okay, that's life. So speaking about the venture capital, I mean, in the podcast, I talk about tech. It's a tech podcast, but it's really about the tech community and the environment. And obviously, and you described that the venture capital is part of this environment, just like the House of Startup or the Luxembourg Business Angels. And you mentioned that as a venture capital, just for everybody, including me, can you explain how does that work? Because you talked about leverage funds, but where do the funds come from? What do you do with them, and so on?
Yeah, Laurent, you put it right. So here we are not the stars, the tech entrepreneurs. They are the stars. We are here to support them. But as a venture capital firm, we are also have our own, business and how we do things. So we actually do three main things. So first, we need to raise the money. And secondly, we will invest these monies in the entrepreneurs. And the third thing is we also support them in growing the companies and eventually exiting the companies. And about maybe I'll just break down, let's say, who are our investors first. So we raise money from three types of investors. The first is public investors. So we have the State of Luxembourg, SNCA as our investor in this category. And then we have the corporate investors, where we have Proximus, we have SES, we have Post, Cargo Lux, Bell, and all these, and Chamber of Commerce as well, and the university as an investor in our fund. And then we also have the third categories is high net worth individuals and family offices. And some of them invest, 100K up to 500K. And some of them, if they're family offices, they invest, 1 million to 2 million. So this is really, the type of people who are actually providing the capital in order for us to support the entrepreneurs. And these are also the people who also believe in entrepreneurship. It's the support of the state. It's also the corporate who is, every corporate starts from a startup. And I don't know what about the history of Amazon, but imagine, every company started with a two-man shop and they grow big. And now they are giving back to support entrepreneurship. And there's also family offices and high-net-worth individuals who are the owners behind these corporates, and they're also giving back to support new companies and new entrepreneurship projects.
So there is this idea of supporting new entrepreneurs, and it's not about let's make some money. It's part of it for sure. You don't invest in anything, but it's about supporting the tech community and the tech entrepreneurs.
Yes, and I think, as an investor, like say our LPs, there are many ways, to invest. There are many opportunities.
Yeah.
So they have to choose between different opportunities. Of course, it has to make money, but on the top of that, there have to be something else in addition to, just making money itself. Yeah. And then the second thing we do, which is everybody is more used to, is to, let's say, we invest in startups. And a lot of times people think it's like a gambling, And I would say like there are, let's say, two things behind is first, we don't invest in a single startup. We invest in a portfolio companies. Let's say could be, 10 to 15 companies for some of the fund. And some fund, they have like maybe 30 companies at portfolio. So it really depends on the fund strategy.
So people invest in the fund,
yes,
not in the companies.
Exactly.
You invest in the companies.
Yes.
And have the portfolio for this fund. Okay.
Yes. So that's why, as a business angel, is very risky if you just invest in one company. But if you invest in a portfolio of companies, the risk is much lower, and it's much unlikely that you will lose your money. And then the second thing is also about, how do you construct the portfolio? Because many people think, okay, you just invest, in 10 startup, then the money is gone. That's not what happened actually in venture capital. Usually we put between 1/3 or half of the money into the first investment into a startup. So which means if I invest, let's say if I have 10 million as an example, I invest in 10 companies, which means initially I only put 5 million out of that 10 million into investment into these companies. So it's only 500K each.
Okay.
And then if the companies do well, I will reinvest more. If they don't do well, I will invest less or don't invest. So in a way, it's really limit your risk to the initial 5 million. And once you find, the several good performers within these 10 companies, you bet the rest of the money on these good performers. So in this way, you limit your risk for the, identify the young startups. And once you identify they are let's say the winners, and then you can maximize your upside by investing the rest 5 million in all these winners.
Well, I learned a lot in just 1 minute. It's good for my investment portfolio. Okay, so and in terms of those companies, I have a million questions now. Let's talk about the tech, because you focus on tech, correct?
Yes.
So is there a specific technologies you look at? Or are you broad? And the silly question I really want to ask is, do you invest only in AI now? Because it's the thing now. You have to have AI.
Yeah, I think that's why I think for a strategy of the fund, it's very hard to say you limit to certain technology because technology changes.
Yeah.
And if you say, let's say maybe a few years back, there's crypto, then you have climate, and then now you have AI. So if you do a fund strategy only focus on very specific sectors, sometimes specific technologies, then it's not like a long-term let's say repeatable strategy. So usually maybe just diverge a little bit from your question. Usually when we look at the venture capital fund, how do you, let's say, characterize the strategy of venture capital fund? First, you characterize them by stage. Mm-hmm. There's some of the venture capital fund, they invest in pre-IPO companies. Mm-hmm. But they're still venture capital fund. Yeah. And it's also fund like us who invest in companies, they have 2 people up to 20 people. So it's very, very early stage. It could be just founded less than 1 year, 3 year, 5 year, up to 7 years. Okay. And then you can also categorize them, you say, by business model. You have a lot of VC fund that invest only in B2C. And a lot of VC fund, only invest in B2B because they understand the business model really well of each of the segment. And then you have as you said, some of them, let's say VC fund, they do only fintech. Some they only do climate tech. Some they only do cybersecurity, and they invest across a wide geographies.
Okay.
And there you also have, then the last category, you also have venture capital fund like us who focus on a specific geography.
Okay.
And why do we do that? Is when we invest in very early stage, there's how do you find these entrepreneurs? Like, how do you even know if they're raising money?
Definitely, yeah. Well, how do you find them, or how do they find you? Because I sometimes go into, not so long ago, I was in I think it was big data conference in Paris, and I looked at some guy with quantum computer startup, and he came to me because he saw I was reading his pitch. And he was really looking for investors. So it was like, I'm looking for investors. Can you help? And so on. So I imagine they come to you. But so how do you do to find them? How do you meet them? And the adjacent question is how, because I saw the answer on your website, but I really want to know the truth. How many pitch deck do you read a year?
So maybe back to your question. So how do that startup find investors, right? So actually, when you're very, very early, so when you have revenues, many investors are interested in you, right? When you don't have much revenue, just a couple of clients, well, the best chance you have is local investors because they are there to
they are invested in their community. So
exactly. And then the second thing is, I say, these sector specific fund. They are fund they just do deep tech quantum. They're quantum fund, so then you have the best chance to them. So that's why for us, so when we tell startup founder, you need to put focus, and for us as a fund, we also need to have a focus strategies so the entrepreneurs can find us. So our message is clear, and to say we are here to support early stage companies within the Luxembourg startup ecosystem, and we meet with them very, very early stage. Sometimes they didn't even incorporate their company. So we keep, the relationships, and we invest when it's the right moment. And sorry, I forgot you previous question
then
about.
The question is that you're getting some pitch deck. How many do you read a year?
Yeah. So within the Luxembourgish startup ecosystem, there are roughly 70 new startups every year.
Okay.
Within the ecosystem.
Okay.
And on top of that, you also have, people like Lux Innovation, like us. We are not just waiting here to say for companies to create, right? So we are also actively trying to attract other startups at early stage from abroad to Luxembourg.
Okay.
And so this is, especially if the company is in fintech or space tech, it definitely makes sense, to be in Luxembourg. And honestly, sometimes even if they're not fintech or space tech, for the entrepreneurs, they're very flexible at the beginning, right? And Luxembourg has a really good ecosystem. If you think about if there's an investment, and also for the grant side, is also very generous, the young innovative grants. For example, if you raise, let's say, 1 million in equity, you probably can get up to 1 million in non-dilutive free grants. And in other geographies, it's just not as competitive as in Luxembourg. So that's why a lot of companies also come here to the faithful start, and due to the ecosystem itself in supporting early stage entrepreneurs. And we also receive pitch decks from other geographies. But most of the time, I think we really just discard them quite quickly if we think there's no link to Luxembourg, if we think there's no strong reason to be in Luxembourg, and if we think that we don't necessarily also don't see this as something like very unique in putting the effort in attracting them to Luxembourg. But we do see companies when there's strong, let's say, a really interesting idea, we talk to them, even though it's not in our investment horizon, but we need to understand what is going on in the market. And if they're interested in Luxembourg, that's great. If they're not interested, then we are happy to provide them some advices just from a venture capital perspective.
Okay, I see. And in terms of technology, in terms of tech, because tech is quite a wide field, and I'm a CIO, and I do technological watch, but it's hard to know everything, and you find new things every day. How do you validate and validate might not be the right term, but ensure that the tech they're using or they want to use, whether it's a company using a tech to do something, or a company that develops a tech, how do you validate, for lack of a better word, that what they do in term of technology makes sense?
Yes, so I think over the history, there's many type of technology has been invented, right, from the Industrial Revolution up to now, right? So I think maybe something we viewed as industrial, it used to be all new technologies, and it's still many new technologies. It's just like if you look at the venture capital investments, it's primarily focused on software companies. Well, there's obviously semiconductor space, quantum, and batteries and all these. But if you look at the primary focus are software companies, and for software companies, most of them they don't have IPs, right? And the reason why people focus on software companies is just from a business model perspective, it's very scalable. Because you don't have to build a new factory,
Yeah.
right? You don't have to find a lease, and you don't have to hire many new people. It's not like if it is a SaaS instead of on-premise, it's the same software for different customers. There's some implementation to do, but it's much more scalable. That also comes back to what venture capital is. So our investment horizon is yearly 10 years, and then you can maybe extend it a little bit. But we need to see companies reaching certain size within 10 years. So if it is, companies developing technology that takes maybe like 20 years horizon in order to, even have the potential to generate, 20, 100 million revenues to be sold, then it's really hard for us to exit. So that's why majority of the firms invest in software companies, because it's quite easy. Within 6 months you have
software is evolving. I actually was listening to a pitch yesterday, and we discussed about the functionalities of the software, and it was interesting because the guy already has some customers using his product in his current form, but there's ways to make it evolve. So even if you don't have all your ideas translated into a software, you can release already a product that give added value to the customer. And what I thought was brilliant yesterday, I mean, I know a lot of companies do that, but then they build the rest of the software with the customer based on their feedback.
You're completely right.
So that's interesting. But then I go back to my guy on quantum computing. That's not necessarily something, it's maybe too deep tech for you to invest. Is that correct?
For us as a firm, yes. But that's why, EIF, is heavily invested in venture capital fund specialized in deep tech. So this is, from the European Commission level to really focus on deep tech companies for the European sovereignty, focus of having technology. So there are many deep tech funds that are funded by EIF in the deep tech industry, and that is also that's also good for fund managers to have such a strategy, because they are investors like EF who are interested in putting money in this type of strategy.
Okay. Good. And I want to go back a little bit to something you said earlier about helping and supporting the companies grow. Are you talking about advice on how to run the company, or more in how to manage? Because I can imagine that running a company and developing a software are two different skills. How do you help them?
Yeah, so I think first I want to also take a step back. Is like a lot of times when we talk to entrepreneurs, you say, oh, you need to be coachable, you need to listen to advices from other peoples. But at the same time, I also say, like, they are the entrepreneurs. It's their business. And they started these ideas. They put all the risk. In Luxembourg, we can easily have a comfortable life if we don't do our startup. So this is their company, and they have their own convictions. And we invested based on that conviction, which may pivot in the end. So here we are an investor, but we are not the managers of the company. That's the first thing. And the second thing is, what we don't do it just to tell them what to do, right? I think nobody likes to be told what to do, especially if you're entrepreneurs. You have very strong conviction. You have your own egos, right? So what we are here, we are the members of the board for the portfolio companies. So they are the strategic discussions. They are the administrative factors, and they are the things that need to be done in a certain way. And so we discuss strategic matters. So we challenge the entrepreneurs in their decision making, in what they have put into considerations. And what we also do is we gave the examples of some of the other companies we have back in the past about what they have faced as a problem, how they solve it. And every company is different. There's no same companies. And so, but it's to give them some context and to also inspire them to think about certain issues earlier than later, also to realize what a small issues in the beginning could become a big issue later. So this is our role here, and I think it's not to tell them exactly what to do. I think, yes, sometimes we know the answer is absolute, but most of the times you don't know, in the early stage, what is 100% what is the correct way going forward.
And do you it make me think of a company I heard pitching once, and I really appreciate the founder telling us it's a tech company. Actually, you also invested in it, and the founder said, well, it was about sales, and said we went into one direction, it didn't work, so we decided to change. It was about also which people they hired for sales, and to change the way they worked. And I appreciate that, because I mean, the guy learned from his mistakes, from the way they did things, and then they move forward, and that company is doing well. It's Kidola, if I can name it. It's a great company. Does that mean that when you have a pitch and a startup in front of you, the person in front of you matters as much?
Yeah, so I think the person matters a lot, but it's not by because I think a lot of maybe found today, they're really look at, okay, this person have 20 years of experience running that. This person has already launched a company, so it's a serial entrepreneur. This person has been top executive, I don't know, at a famous startup. So I think these are great. These are also type of founders we really look up to, and we also think would be the right person to back. But I think a lot of time there are also entrepreneurs who are have no fancy background, and they have solved a real problem. They have a good solution, and the market is great, and they could be much more successful than other entrepreneurs, even though they have a much better background on paper. So yeah, if I put it this way, yeah.
For sure, I think that sometimes you have people that says, well, they're a little bit. I've seen that once in a pitch session. A guy who really is business model seems to be great. He knew the stuff and so on, but he seems like for him it's going to be easy, and they just have to. And I thought, I don't want to invest there, because that guy is not going to put the effort, or he's already think he won the battle and it even starts. So
yeah, I think what is also the search entrepreneurs that we backed, that we also really appreciate, is he learned how important it is to listen. And he or she is like these entrepreneurs. They also realize every business is a different business. It's not because you can succeed in the first business. It could be many factors, including luck.
Okay, yeah.
All right, and then when you come to a second business, it may not be the same business model. It may not be exactly the same type of customers. Everything have changed, and you have to start really from scratch, whether you're serial entrepreneurs or not. And I think none of the companies at early stage look great. They also have all kind of problem, not going ideal. And I think maybe of course, when you go to the media, when you go to press release, everything is like, oh, it succeed like this, so simple. But I think behind the background is never simple. And I also understand maybe sometimes for the entrepreneurs, they need to be able to give confidence in front of the public and in front of the investors, so people will take the risk in believing in them.
Very clear. Thank you for that. Now my last question is about the tech community. What would you want to ask? What can we do, the tech community, to help you and to support you to continue support startups?
So I think, the tech community is, many of you are actually clients of startups, right? Yeah. So when a startup go to you, you say whether I will, adopt the solutions or not. And I think that's definitely is the feedbacks from the tech community to give to the startup founders about, if I don't use it, what is the reason behind it? I think that just feedback is very important to the entrepreneurship. And the third thing is, I think people from the tech communities are the people who could be future entrepreneurs, right? And I think it's just to be aware of actually the support is available within the ecosystem. It's not there's always, risky startup company, but there's, house of startup, there's grants, if a first start program, there's investors putting money, like us putting money, and then it's a risk, but at the same time, you are, mainly the shareholders of the company, so you're also well incentivized for the startup. So this is what I also want to say to the tech entrepreneurs. If you have an idea, it's worth trying it out. And if it doesn't work out, you can go back to work for a company as a developer. Nothing will tremendously change.
Okay, so if we have a good idea, we can come to you and ask you even before we even start doing something. Yes, well, that's good to know, because I think that some of my colleagues, especially in Luxembourg, and they want to do something, and I know of one of them who started, he did startup. I think it has to do with technology and academics, but oh, that's good. And I think that's what makes the environment here a little bit, there's a lot of activities, a lot of energies around tech and around startup, which is really something I appreciate. I have another question, just to clarify this, because we talked about it with Philip Linster. I'm talking about the Digital Tech Fund.
Yes.
And the Digital Tech Fund is something a little bit particular that you are running. Can you tell us what is a Digital Tech Fund, and what type of company you invest in with that fund?
Yeah, so thank you for, asking on that subject. So the Digital Tech Fund is there to support early stage entrepreneurs. And so first I wanted to clarify what early stage means. It can be pre-revenue, okay? So it doesn't need to be having revenues. But I would say the majority of the cases when we invest in, the company probably have, 50K up to, between 50K and 500K, let's say annual recurring revenues, and some of them maybe have 2 million, but not really the majority. So here is very early stage, and it's usually so I would say the 20% of investment is in fintech, 10% is in space tech, and the rest 70% is in any other sectors. So, for example, Kidala is for the cash, right? Yes. And then Salonki is for the hairdressers. And then we also have Passport for the cybersecurity. We have Mike for the hotel industries, VideoBot for the marketing industry. So across all industries. And I think that also shows, like in Luxembourg, it's not just a fintech and space tech. There's also very dynamic, sectors diverse sectors. And just because there are clients looking for cybersecurity solutions in Luxembourg, they are hairdresser, they are cash. Yes. So we are really open for different ideas coming from entrepreneurs.
Luxembourg is a little bit like a mini lab.
Yes.
Instead of being in a big country where you have everybody it's quite packed in the same place. Yeah. So you can and you can get yourself known and your company known faster, and with the support of you and others. I think that's what helps start those companies.
And it's not just about starting, and I think it's also have a unique advantage of scaling the companies. Because, whether you're Luxembourgish people, it's people like, Laurent from you, it's like me, we all have international backgrounds, right? So when you start a company in Luxembourg, first, the market is so small. So even when we invest, when the startup had 5 customers, they definitely have 2 or 3 out of Luxembourg. Yeah. So by day one, you're international. And they're very rapidly developing a playbook to expand to different countries. So the ambition of the startups and the potential of the startups we back here is by day one is like on European level, at least if it's not global level. So this is also something which is great for us, that the entrepreneurs have these international ambitions.
Yeah, okay. Thank you very much. I learned a lot today. Thank you for being with us. Merci tout le monde. À la prochaine.
À la prochaine.